Welcome to We Chat Divorce, hosted by Karen Chellew, Legal Liaison, and Catherine Shanahan, CDFA. Each episode, we sit down with divorce professionals and industry experts to provide insights and frank discussions about real people, real situations, and real divorce to help you achieve your best life post-divorce. This episode of We Chat Divorce is brought to you by My Divorce Solution, offering divorce financial planning so clients can secure the divorce settlement they deserve. Visit mydivorcesolution.com to request access. One missing financial document can materially change the outcome of a divorce. But so can spending thousands of dollars trying to trace an account that held $500 just 2 years before you separated. That's what we're talking about today. How do you become confident that you understand your marital estate without spending years chasing transactions that may never change the outcome? Or how do you know when you have enough reliable information to mediate, negotiate, or sign a divorce settlement agreement? The goal is not to collect every financial document that's ever existed. The goal is to start with what you know, organize what you have, build the marital estate from there, and then determine which missing documents actually matter. Hello, everyone, and welcome back to We Chat Divorce, where we break down the messy, emotional, and often confusing parts of divorce and help you make smart, informed decisions every step of the way. I'm Karen Chellew, Legal Liaison and co-founder of My Divorce Solution.
And I'm Catherine Shanahan, Divorce Financial Specialist, CDFA, and co-founder of My Divorce Solution. We're here to give you the clarity you need so you can take control of your divorce, especially when it comes to your money and your future.
Before we begin, a quick note. This conversation is educational and not legal, tax, or investment advice. Today, we are answering a practical question. What financial information do you reasonably need to understand and support your marital estate? At My Divorce Solution, we always start with what you know and what you have. We do not begin by assuming that documents are missing, assets are hidden, or every transaction must be investigated. We begin by identifying the assets, debts, income sources, real estate, businesses, retirement accounts, and investments that are already known. And from there, we organize the documents that are already available. Sometimes you may have a lot. Sometimes people have very little information to start with. But from there, and wherever that is, the marital estate begins to take shape. Once you can see the financial picture in one place, it becomes much more easier to identify what is supported by documentation, what is only an estimate, what appears to be missing, what needs to be valued, and what may not be worth pursuing.
It's really hard, Karen, to do that because we like to start with organization and not investigation. But most people in divorce want to start with investigation. Right?
Yeah.
There's a breakdown, a mistrust, sometimes infidelity, financial abuse. There's so many things that are going on that you want to investigate. So you don't organize. You just kind of go off in all these different directions. And unfortunately, when you hire your attorney with that mindset, their only response to you is we have to hire a forensic accountant. So you don't give yourself that ability to get organized first. And that's where people spend tens, if not hundreds of thousands of dollars.
Yeah. And sometimes a hidden asset or, a spouse spending money that was not disclosed is the trigger that set the divorce in process anyways, right?
Right.
And so then that's what the lead out is. And so everything is about that versus, pulling back and figuring out what you know.
Right. Like create that baseline, give the other spouse the opportunity to give you information. And I know a lot of people say my spouse will not give the information. Mm-hmm. They're hiding money. They've opened accounts I'm unaware of. Well, that could be true, but at least start with asking for the information or recalling accounts. It's a lot of times when we have conversation with our clients, they'll recall different employers that they had or their spouse had or places that they lived. Banks that they were used to hearing about or they've gone to, or The tax return can give us information. Like there are places to get this information before you go down any rabbit hole that you should not go down, at least to start.
Right. And everyone needs to know once you go down that rabbit hole, your attorney and the forensic has no other option than to follow you there because you are the client.
Hmm. Yeah, oh my gosh. How many times have we seen these rabbit holes and we'll say, like, what's the expected outcome from this? And
Mhm.
even if you do find an account from 3 years ago or money that left your account 5 years ago, can you even recoup that now?
Right. Yeah.
You need those answers before you spend money to get nothing in return.
Yeah. Well, it reminds me of a recent case we had where there were several family businesses and money kind of filtered through all of them. And so it definitely was transaction chasing relative to what the family cash flow was. And so it became all about the credit card statements and the account statements and tracing all of it through all different accounts. But when we step back and look at what we had, it was clear what it was. And then we didn't need to do all of that tracing. And
Mhm.
then we could support our clients' temporary support orders, which was a really good outcome for her.
Mhm.
So we generally separate financial records into two categories: key documents and supporting documents. Key documents establish the basic existence, ownership, value, income, or obligation associated with an asset or debt. Depending on the estate, these may include bank and investment statements, retirement and account statements, mortgage and loan records, real estate deeds, valuations, tax returns, and there's quite a long list. But these are the documents that build the marital balance sheet. Supporting documents answer the more specific questions. They may show how an asset was acquired, whether part of it may be separate property, where money was transferred, or why a current balance does not tell the entire story. These may include historical statements, transaction histories, purchase and sale records, tax basis information, appraisals, business financial statements, stock award agreements, investing schedules, and records showing the source and use of funds. Not every asset requires supporting documents. Each request should be connected to a very specific financial question.
And that is the key statement.
Mhm.
Every request that you make should be connected to a specific financial question. Otherwise, you are just spending money again to get what, right? So the purpose of each additional document request should be clear before it is made. And that is really building your marital state before you get absorbed into individual transactions. It's really hard to do because you have to stay focused on what is the goal here and what is the expected outcome that you're hoping for, or wishing for, right? So, for example, you're given a spreadsheet from your spouse who has always handled your finances. And okay, the spreadsheet looks great. It's equally divided, the accounts seem to be there, the numbers are all clearly written, but that's identifying the estate. For you, it is important to ask for the supporting documents to support that number, right? It's not to chase something, it's just to say, great, this looks good, but can I have the supporting document for that? It's the same thing with a tax return. You could sign it, it looks great, your accountant says it's great, but there's nothing wrong with asking for the supporting documents to support all the numbers on that tax return. It gives you the clarity that you need and actually the confidence to make a good decision moving forward.
Yeah, exactly. So let's talk about material gaps versus transaction chasing. We'll consider two very different examples. Suppose someone separated this year, 2026, and sees that an account held a balance of $500 in 2024 that you didn't know about. There's no evidence of a significant transfer, no tax document showing substantial income, and no indication the account ever held meaningful assets. Could more records exist? Possibly, but would tracing that account materially change the marital estate? We would have to determine that. Now compare that with an investment account that held $250,000 near the date of separation and is somehow missing from the current financial disclosures. That is a material gap. The same may be true when a business generates substantial income but has never been valued, when executive compensation appears on a pay statement but not on the asset summary, when a significant account was closed right before separation, or when separate property must be traced to support a legal claim. So the question is never simply whether a document is missing. The question is whether the missing information could reasonably affect value, income, taxes, liquidity, ownership, or the terms of a settlement. Several smaller transactions may matter if they establish a pattern, but every minor transaction should not automatically become its own investigation.
Again, a hard space to live in when you're the
It
spouse, right? With
is.
all these questions. But a lot of times you can answer some of these questions in your own mind by just getting statements from prior years, right? It doesn't necessarily mean you need a forensic accountant at this point. So by requesting, year-end statements for the last 3 years, maybe even 5 years, but at least the last 1 or 2 or 3 years, you can see what the balance changes have been, right? And then you can reasonably decide if this is something worth tracing or not. So again, it's really just establishing your marital spreadsheet or balance sheet, people call it, and then the supporting documents. And then if it seems a little strange, get the prior years or date of inception, because sometimes accounts are open right around separation or right afterwards, and that's okay, that happens. But there are specific documents that you can request before you, again, go down a rabbit hole that will be expensive and may not turn out to give you the information that you want.
Exactly. So let's talk about how far back should you go? People often hear that they should request 3 years, 2 to 3 years is standard, 5 years, or even more of a financial history. There's really no single look back period that fits every divorce or every asset. The relevant period may depend on state law, discovery rules, the date of separation, the type of property, the date of separation, or when the marital estate is being divided. Sometimes that's the date of divorce. And also considering what a court considers relevant and proportional. So going back several years may be appropriate when there's a clear reason, such as a significant asset recently disappeared, separate property needing to be traced through a long marriage, business income appearing inconsistent with the disclosures, or unusual transfers occurring before separation. However, requesting records simply because more records may exist can be very expensive. So before going further back, ask yourself 4 questions. Number 1, what am I trying to prove? Number 2, how could the answer change the marital estate? Number 3, is a court likely to permit the discovery? That's a really good question for your attorney. And number 4, could the cost of pursuing it exceed the likely benefit?
I like all these questions. How could the answer change the marital estate, which is really important. Again, because if something occurred during your marriage years ago, Karen, they mostly say, well, that happened during your marriage. There's nothing we could do about it now, right? Even
Yeah,
in egregious situations, I've seen them say, well, that money's gone. What are we supposed to do about it now?
yeah,
Or, yes, that was the lifestyle you lived. You didn't realize that was the lifestyle you were living, but you were. So there's nothing we could do about it. So you really need to ask your attorney, how could the answer change the marital estate? And of course, you might hear, it depends. So you might want to give a couple of scenarios to then see how it would change your estate. I do like, is a court likely to permit the discovery? Really, what does the court really look at with that? I know you like that question. For me, it's a confusing question.
Well, here's how it goes. So a client will say, to their attorney, I believe that my spouse 5 years ago spent $200,000 on, I don't know, some type of asset, maybe a vehicle, and I don't agree with that. And I think my spouse spent all of this money throughout our marriage on waste. And so the attorney will say, okay, let's figure it out because it's really important to you. You're not going to let that go, right? However, then when I get on a call with the client and the attorney and I say, what do you believe the outcome would be for our client here? What is the likelihood that the court would recognize this financially and it would financially benefit the client? Most of the time, the attorney will say less than 2%, because the courts don't have bandwidth. They hear these stories every day, all day. They want to know what you have in front of you. Sometimes, if it's egregious and it's evident, the courts do unequal distributions of the marital estate, but even that's minuscule.
Mm-hmm.
So it's really something that situations people find themselves in without really understanding what the financial outcome could mean for them.
Mm-hmm. And what am I trying to prove? That's a great question. Recently, we had a case where one spouse just really wanted to prove that the other spouse was hiding things, was a liar, was really, she was just up in arms about it, right? And he was like, okay, I might have forgotten to disclose this, but here it is. And it didn't really amount to large amounts of money. And also combative because always thought that his spouse was always just judging and coming after him for something, right? So the tense, they're both so tense about it. But at the end of the day, what are you trying to prove? Because that to me is a justice feeling. And maybe rightfully so on both sides. Who knows? I don't know. I'm not in their marriage, right? We just listen as we collect and analyze. But what are you trying to prove? And is this really the place that you'll get that answer? Or are you just spending money that maybe you can have later to move on with your life? And justice comes maybe to you in other ways at some point in time, right?
Yeah. And are you trying to establish a pattern or are you trying to establish a dollar amount? That's two different things. And so, having the conversation with your attorney, what do we need to do to establish the pattern? Because trying to go after all these accounts is going to be very expensive. So those are really good conversations to have and to be aware of.
And listen, I get it. I've been through a divorce myself, right? And so have you. I get it. You do want to prove something. Everybody wants to
Mm-hmm.
prove something. So you feel better at the end of the day.
Mm-hmm.
But you don't feel better when you're spending tens and hundreds of thousands of dollars getting something you don't get. It's still going
Yeah.
to take you time to get that justice that you need. So the last question that you asked was, could the cost of pursuing it exceed the likely benefit? You really need to assess that and ask yourself and let that settle in your mind. Is it worth the cost? And if it is, then go for it. But if it really isn't, then take pause and look at what you do have, what you do know, and if you can make decisions based on that.
Yeah, I had to learn that hard truth. My ex-husband had a cash business, and it was a hard pill to swallow when, they said, well, you knew he was depositing cash in his back pocket. You knew that your entire marriage. There's nothing you can do about it now. So it is what it is. That was tough.
Mm-hmm.
All right, let's talk about when documents are hard to get. As we know, we hear people say, my spouse will not give me the documents. So the conclusion is they'll get punished by the judge, right? The judge will make this all right for everybody. But here's what we want you to understand. Courts do have remedies, but those remedies are not automatic. They become available when your attorney uses the legal tools available to compel and enforce the production of documents. Those tools may include formal discovery requests, authorization, subpoenas, depositions, and motions to compel. Depending on the jurisdiction and the facts, an attorney may also file special motions asking the courts to prohibit a spouse from claiming a value for an asset, or especially when they have not produced the documents to support it. Many options are available, but the determination is not made by a judge unless your attorney has presented all of the tools used to try to get the documentation needed. So a judge cannot address a document dispute that was never properly raised. The client's role is to identify the concern, provide the information already available, and explain why the missing documentation matters so the attorney can choose the right tool. Subpoenas are one of the tools. They're not automatic solutions either, because sometimes, and oftentimes, frankly, a subpoena comes back stating that no records were found. How often do we see this? That does not always mean the account never existed. The subpoena may have gone to the wrong institution or corporate entity. The account may have been held under a different name, trust, or custodian. The identifying information or the requested information may have been incomplete, or the requested dates may fall outside the institution's record retention period. So when a no record response comes back, the right question is whether the correct records were requested from the correct source.
Oh gosh, that's so frustrating because a lot of times financial institutions' names change through mergers, custodial relationships, which the common subpoena will miss, right? What do they usually say? Any and all? I love that statement. Any and all, right?
Mm-hmm.
Like
Yeah.
what does that even mean? Okay. Or
Yeah.
the other one is relevant. Well, who determines
Mm-hmm.
what's relevant, right?
Yeah.
Um,
Yeah.
so this is a frustrating thing because how many times do we wait to do our final assessment until all the subpoena responses come in? And they come in and we're like, okay, well, we already had that, or something is still missing. I mean, you are much more patient with that than I am.
Oh, I spent so much of my life being responsible to answer subpoenas, and when you receive a subpoena on behalf of your company that you're working for, it's your job to be laser focused on what's being requested, and if the exact documents aren't being requested, i.e., if someone's asking for a checking account and they're actually brokerage accounts, guess what? We don't have checking accounts, things like that. um,
Yeah.
you look and that is the job of a person responding to a subpoena, to make sure they're only providing what's exactly being asked for.
Is this a space? And if not, we could do it on another podcast. But I'm thinking of a client who kept telling me there was a um, discovery request, oh, deficiency list.
Mm-hmm.
Deficiency list. And for me in the financial world, deficiency list is what documents are missing, right?
Mm-hmm.
And then you pulled it up because I had to consult with you. Like, what are they talking about? And you brought it up and you said, here's the deficiency list, which were all like emotional questions,
Yeah.
right? And you're like, Catherine, this is not like ours. So can you explain that a little bit to individuals who might be in that position as well?
Well, deficiency can be a broad term, but when discovery is sent out and the opposing counsel or the spouse only provides limited or minimal responses, then the requesting attorney creates what's called a deficiency list or a deficiency letter, which goes through, and it's way more than financial accounts. It's really pressing in on the issues. And that's kind of where things start to go off the track, because you can see the pattern developing, that they're going to give you two pieces of paper at a time and then you're going to need more. It's That's why we call it the hamster wheel. But we prepare a deficiency list at My Divorce Solution just specific to the accounts and the documents, key and supporting documents that support the marital estate. It's a very focused list. And to your point, the deficiency list going between counsel, they're long, they're drawn out, and not typically um, that uh, efficient in getting the documents needed.
And I love that we're able to do that because, because of our 10 steps, our client sounds like a AA thing, but it's not. 10-step process, although maybe it kind of is in the divorce world, right?
Awareness is first.
Yeah. We're able to hear their emotional, but reel them in and say, let's keep our list to these financial documents that we need, the importance, because it's very easy for the other side to distract you because that's where the justice piece comes in or the anger comes in, right?
Mm-hmm.
We all want to go down that path. But, when you go through that list with our clientele, or your department with us goes through that list, it sticks to what is the priority here. What do we really need to make a smart financial decision to negotiate or to go to mediation or what have you? And being able to stay in that zone is so beneficial in so many ways, but very difficult to keep people there.
It is. Let's face it, divorce is emotionally charged. And triggers are being set off every day between the spouses. So it's really hard to stay focused
Mhm.
on the financial transaction. It's really tough. So we can't complete this conversation without talking about mediation, because mediation as well needs a foundation, not necessarily perfection. So while some people spend too much time chasing documents, others are encouraged to mediate before the essential financial information has been gathered. I don't want to say sometimes, it's most of the time, frankly. Mediation can be productive, but it does not replace financial disclosure, valuation, or preparation. You cannot confidently negotiate the division of a business no one has valued. You can't evaluate a retirement account without a current balance or knowing the balance at the date of marriage. You cannot compare settlement options when significant assets are missing from the marital balance sheet. That does not mean every supporting document must be in hand before mediation. It means the material issues have been identified and everyone understands what is known, what is supported, what remains uncertain, and how that uncertainty affects the proposed settlement. And not every open question must be answered by tracing every dollar. We'll grant you that every day of the week. But sometimes the better solution is negotiation. Depending on the facts and applicable law, the parties may agree to a conservative value, allocate a disputed asset to one spouse, offset the uncertainty with another asset, use a future adjustment or true up, or include protections in the settlement agreement drafted by counsel. The distinction to hold on to is the difference between an unanswered question and an unacceptable risk. Some questions could materially harm one spouse if they are ignored. Others can be acknowledged and addressed through the overall settlement after weighing the possible recovery against legal fees, expert fees, taxes, timing, and the emotional cost. That's not giving up. It's a deliberate decision based on the available information.
Hmm. Yeah, that's another hard one, right?
Mm-hmm.
Because so many people in mediation feel beaten down or confused, or just they do want to give up in some sense, just to be over,
Mm-hmm.
be done with it all. And then there's that buyer's remorse the next day, or people walking away with a different understanding of what was actually agreed to. That's another really common one. Um, when I go through division scenarios with our clients when they're getting to the end of our process, it's really hard because one decision, it's a domino effect, affects everything else. And so that one decision with typically your biggest asset, because we have to balance everything else out, is if this happens, this can occur, or if this happens, this occurs. But if this, it's very hard. But I like going through that exercise because then when you're in mediation, you're like, oh yeah, we talked through if that would happen. I mean, it's hard to remember for sure. Um, but at least you're going through this role play of scenarios so that you're not so shocked when it happens in mediation. Because I can't tell you how many, probably every time when we go through what might happen in mediation, every one of our clients say, oh, that was never discussed with me. Oh, I didn't know that could happen. Oh, I didn't know that that's what it will be expected from me in mediation. And I like going through the negative part of it as well, because then you're not blindsided when you hear it, you know.
Mm-hmm.
So that's my big takeaway with mediation. If you don't have the documents, like you were just saying, you could still make a decision. You can still compromise, get more of something else. Like there's a lot you can do, but you really should walk through those scenarios before you walk into mediation.
Exactly. And have a really clear understanding of the knowns. Like, what is the knowns? What can you definitely count on? And what's over there in the gray area? Like how much is sitting there? And I think you're very effective with the modeling of the division scenarios because people then know their bandwidth to compromise.
Mm-hmm.
There's a value to the emotional conclusion as well. And that has to be factored in when you're making your final decision. So the hardest part of divorce, financial preparation, is finding the balance between diligence and proportionality. Before your next mediation, settlement conference, or attorney meeting, ask yourself 4 things. Do I have the key documents supporting the marital estate? Which missing records could materially change the financial picture? Is there a realistic legal path to obtaining them? And if so, what is it and how long it will take? I just add 2 sub-questions there.
Mm-hmm.
And if the information cannot be obtained, is there another way to address the uncertainty in the settlement? The lines will not always be clear, but when you start with what you know and what you have, you build a foundation. And from that foundation, you can identify what truly matters and move forward with confidence.
Financial clarity means having enough reliable information to make informed decisions, not always achieving the absolute perfection and getting the answers to every question that's roaming around in your head.
So thank you for joining us today on We Chat Divorce. If this episode gave you clarity or a new question to consider, please pass it along to someone who needs to hear it.
And if you found value in today's conversation, take a moment to like, subscribe, and leave a comment wherever you are listening. Every share helps us reach more people searching for honest, financially grounded answers.
Learn more at mydivorcesolution.com.
And until next time, remember that financial clarity is power. Make your decisions with confidence, with verified information, and with the right people in your corner.
Thanks for joining us on another episode of We Chat Divorce. We hope this episode was informative and supportive on your divorce journey. If you're looking for more support for navigating divorce with confidence and clarity, head over to mydivorcesolution.com for more podcast episodes, divorce events, and resources for your divorce. We'll see you back here for our next episode.